this video, I'm going to discuss the various ways in which I carve out equity percentages of the deal to those who bring certain aspects such as finding the deal, managing the deal, financing the deal, raising capital for the deal. Any ways that you can provide value and you wish to not have a one-time fee for it, I offer equity percentage and ownership in the property itself over the long term. So over the course of the 5 to 10 years in which we hold the property, you get to sit in the back seat and see how we find it, how we stabilize it, how we finance it, how we add value to it, and how we realize profit from it. So if we're doing a large apartment building or retail or office space, instead of taking that one-time fee, it may make more sense from the long-term perspective to take that equity and that long-term residual income in perpetuity and hold on to it throughout the future. I'm going to cover the various ways in which we carve out ownership to people who bring pieces of the deal together. In the description below, you'll see timestamps. So if you want to skip ahead to certain parts or you want to come back and revisit certain parts, feel free to go below, click the timestamp that you wish to jump to. I'm also going to provide the PDF version that I've created for this that outlines in more detail and more thoroughly the exact points that I'm discussing. So if there's something you didn't quite understand, I'm sure the PDF below will outline it and explain it a lot more thoroughly. The one thing to understand with how we structure these deals is that there's always an LP, which is the limited partners. Those are the investors that are providing the capital for the deal. That's really their only sole responsibility. And then you'll have the GP, which is the general partner. That is the active, ongoing manager and management of the project, which is ourselves. And out of that general partnership is where we carve out the equity. So no matter what happens, the LPs are at their set. We'll use 50%, for example. They have 50% of the equity. I'll have 50% of the equity. And from my 50% is which these fees is how you're compensated. So I'm giving up a portion of the general partnership to provide you the opportunity and the equity to ride along on the deal. So whenever I say these numbers, they're going to be divided by 2 or whatever the percentage is between the LP and the GP. So the first piece is a project finder. This is typically a realtor or wholesaler or anyone who brings the project to us, that brings and finds us the deal. So you can make the decision whether or not you want to take a simple commission or a finder's fee or a wholesale fee. That's fine. You can get paid the one time and you're on to the next. Or if you think that the deal has enough opportunity and you want to see how it's done and how it's restabilized and how we handle that sort of project, you can opt to join in on the equity ownership, which we provide a 5% portion of the general partnership, which is out of our share, which is 2.5% of the total project. So you will own 2.5% of that project going forward until you're either bought out or we sell it. Number 2 is the financing sponsor. So this is if you're signing on the loan, providing a personal guarantee on recourse debt. This we typically allocate up to 20% of the general partnership, which is 10% of the total project. So if you were signing on a bank loan for the property, you will receive 10% ownership and perpetuity going forward as long as we own the property. Number 3 is an investor referral. So if you make an introduction to a capital partner in which we raise the funds to complete a project, you will receive 10% of the general partnership, which is 5% of the total project. So for simply making an introduction, and that introduction has an outcome in which those investors invest in a project with us, you will receive your 10% compensation of the GP. Number 4 is property management. So this is a more niche role. This is meant for those who are already traditional property managers that are boots on the ground. They're going to be dealing day to day with the tenants and responsibilities of managing a property. The reason that we would provide compensation in terms of equity for this is that if we wanted increased cash flows or we were in a market where we needed to have a more stable and trusted management company, somewhere we're not as familiar with, we would bring the manager in as an owner, as we believe that they would treat the property possibly a little bit better as if it is their own, because they will own portions of it. So this sort of compensation is up to 30% of the general partnership, which is 15% of the total project. At the same time, it would also help produce greater cash flows as we're not having to pay that monthly management fee out of the operating expenses. And then number 5 is the ongoing managing partner, which is typically myself or my other partners. That is a 30% portion of the general partnership, which is 15% of the total deal. So for us putting it together and overseeing and managing things, we take a 30% of the GP, 15% of the total project. So those are the various ways in which we offer compensation for those who provide value to us. Like I said before, check the PDF down below to go through some of those items that I touched on a lot more thoroughly. Hopefully you guys found some value, and hopefully we can work together in the future, whether that's finding deals for us, providing investors, managing deals, providing financing, any of the sorts of things I talked about. So if you wish to get involved and to learn how we buy, restabilize, and fix up property, or you're simply just looking to increase your net worth or get some residual income, these are the various ways in which you can get involved.